Hello to all traders and welcome back to another market review brought to you by Orbex. So we've been reporting on gold and oil for the vast majority of last week after from the beginning of the US, Israel and Iranian conflict that started quite significantly impacting the markets. Oil especially hitting $120 the first time in 5 years since the Russian-Ukraine conflict began. But since then, we've had a complete reversal in fortunes, especially with the fact that the International Energy Agency is saying it's going to release 400 million barrels of oil to help ease the supply, and also Japan are looking to release some of their reserves as well. So it looks like oil is getting back on track. But how about the other markets? We're just going to take a look on indices today, especially the Dow Jones and the S&P, after the Dow was seen bouncing back. So since the start of this conflict, we had quite a dramatic downturn because of the worry over inflation, interest rates, and the price of goods in general during this particular era where the Strait of Hormuz is currently closed. And we're just going to see now if today's inflation data later on is going to start picking up quite significantly, because that's what usually does happen when goods and supplies are really tight around the world. So at the moment, we're just seeing a few levels in consolidation at the moment. Just wait to see if we can test and break through this mid 47,000 area to start sliding down to the lower regions of 47,000, or after hitting a bit of a heavy rejection a few sessions ago at 48,000, are we going to see more of a pop higher? We'll obviously have to wait and see. Oracle in yesterday's trading had very good earnings report and also a good forecast as well, but that doesn't stop the fact that there is worryingly a supply issue for oil and other goods for the next few months at least. I mean, Donald Trump did say that he's going to end this conflict in 4 to 6 weeks, but it's probably going to take a bit longer than that by the looks of it. So this is why traders are being concerned, and why we're having such a choppy market at the moment. So as you can see here, but this downturn did start at the end of February before the conflict was announced. So we were seeing a bit more of a sell-off on the Dow, and it has actually been more dramatic on the S&P, because as you can see here, really visually more of a bearish channel, lower lows on the chart and spiking towards the lower, well, the middle of 6,000, now just picking up and breaking 6,700, which is quite significant. But since then, as you can see, 6,800, a bit of a failure at 6,900, but now having a little bit of a choppy road ahead in today's trading. So it's all about inflation data today, as well as obviously the big fundamental headlines about the Iranian conflict as well. So can inflation pick up? And where do we go next? It's at 2.4%, 2.5%, roughly around that area at the moment. If we start popping up to 3%, the Fed might have to start looking at raising interest rates, and that's something they don't want to do, especially after getting the rates down so far after the COVID pandemic. And it will be a bit of a bitter blow for Jerome Powell if this is the last actions that he will have before exiting the Fed chair, before being replaced. So lots to think about, lots to sink our teeth into. As I said, oil is kind of on a plateau at the moment, bringing prices back to where they were. The S&P, as you can see here, trying to get out of this bearish channel at the moment, but really stuck in more of a tight angle, as you can see here, just attempting to break out and hopefully move above 6,900, which will definitely break out of this bearish channel. On the Dow, as I said, just looking at a few levels here to see if we're going to have more or less of a consolidation, especially with the RSI in a neutral way as well. So thank you very much for joining me. This video we're posting on our YouTube and Telegram channel as usual. So stick with us, stay ahead, trade responsibly, and we'll speak again next time around. Bye for now.